friends, welcome to my YouTube channel Ace Tax. I am Rajendra Handa, Taxation Manager at Ace Tax Consultants. Today in this video, we are going to discuss the applicability of corporate tax on small businesses and startups. Recently, the Federal Tax Authority has introduced this relief to save small businesses and startups from corporate tax cost and related compliance burden. So, what is this small business relief? What are the benefits available under this scheme? So, under this relief, under this scheme, any gross revenue of a person during the tax period is exempt, even if the profits during the tax period is exceeding 375,000 dirhams. So, who can apply under this scheme? Any resident taxable person whose gross revenue, that is revenue from sale of services and goods during the tax period or previous tax periods after the applicability of this corporate tax law, is up to 3 million dirhams, are eligible to claim relief under this scheme. Further, any eligible person who claim relief under this provision are not required to maintain transfer pricing documentation. So the next question is, who cannot apply for this relief? Any free zone person who is registered under any free zone and constituted of multinational companies are not eligible to claim relief under this scheme. Further, any taxable person whose revenue exceeds 3 million during the tax period or previous tax periods is also not eligible to claim benefit under this provision. Further, what are the other conditions and points we should keep in mind while claiming relief under this provision? Even if a person claims relief under this provision, he is required to maintain books of accounts, file declarations with the authority and corporate tax return. Further, the revenue is to be calculated keeping in view the accounting standards followed in UAE, which is IFRS. Further, the corporate tax registration is also mandatory for any person who is claiming relief under this provision. Moreover, the tax loss incurred during the tax period cannot be carried forward to the future years. Apart from this, there is a general interest deduction rule which says that any interest expenditure during a tax period which exceeds 30% of earning before interest, tax and depreciation cannot be claimed as expense and needs to be carried forward to the future years. If a person is claiming relief under this scheme, he cannot carry forward that excess amount of interest to the future years. Further, this scheme is only available up to tax period ending on 31st December 2026. Apart from this, if any person artificially separates his company just to reduce the gross revenue to the threshold limit of 3 million, then that is not allowable. The government authority can combine the turnover of both the entities if that is formed solely for the purpose of tax evasion. So my advice is, before claiming any small business relief, it is better to take note of the restriction of loss incurred during the year or general interest deduction rule and also the other restriction under this. So I hope you find this video useful. Thanks for watching. Don't forget to subscribe to our channel to get the latest updates and insights about doing business in UAE. Thank you.